Application of Blockchain in Banking by the blockchain consultant, Mr. Shankar Ayer. The blockchain concept was pioneered with the context of cryptocurrency, Bitcoin, but engineers have imagined many other ways for distributed ledger technology to streamline the world. Stock exchanges and big banks are looking at the blockchain type state systems as trading settlement platforms. Blockchain is really exciting technology because it's actually providing both transparency but also agility in a contractual relationship that any organization should have. The blockchain cannot be described just as revolution. It is a tsunami-like phenomenon, slowly advancing and gradually enveloping everything along its way by the force of its progression. The blockchain is going to change everything more than the internet has. The internet is a programmable information, but blockchain is programmable scarcity. Rightly said by Ginny Rometty, CEO of IBM, anything that can conceive of as a supply chain, blockchain can vastly improve its efficiency. It doesn't matter if it's people, number, data, or money. On this note, I take this opportunity to introduce our versatile speaker for the day, Mr. Shankar Ayer. Welcome, sir. He is a blockchain and cryptocurrency writer. Sir has over 14 years of experience in identifying and providing strategic research and advisory to different companies. The area of expertise include cryptocurrency trading and investing, fund manager research, macroeconomics and global events, innovations in blockchain industry. Sir is actively involved in academic content on blockchain technology, publishing articles in business news, financial journalism, press release, and news content. Sir also focus on business enhancement by optimizing performance of entity, team and relationship management, developing strategic relationships, and key accounts management. I once again welcome Sir and request you to take it over. Over to you, Mr. Shankar Ayer.
Thank you, madam. Thank you very much. Hello, everyone. I hope I'm audible enough. Let me start with a small introduction about myself. I've been working, I completed my graduation back in 2006, and since then I've been working in the banking and financial services. So for the first 2 years I was dealing with this. Then in 2008 the financial crisis happened, and I said, let me reconsider. Then I joined an Indian company. I was working in debt syndication for almost 3 years. So there, my affiliation with banks increased. I spent more time in understanding how they give loans, how the loans are sanctioned. So these were just some of the things that I used to work on. Then I was lucky enough to get an opportunity with Deutsche Bank. This was back in 2012. So I was there for 1 year, and that was when the Euro meltdown happened. And this time after the US in 2008, in 2012-13, it was the Euro. So I was kind of wondering how to go about next. And just to add on, I have completed CA Inter. I have completed the first level of CFA exams. So then I thought I'd rather try my luck at CFA once again. And that's when I cleared the first level of CFA. And then I got a job with a company called Immutable, which is now CRISIL. CRISIL has taken over that company. So I was there till 2019, and things seemed a bit dicey about how the financial markets are working. So I thought in 2008, when the Lehman crisis happened, that's when I heard about Bitcoins, but it was very fresh at the time. In 2012, the crisis, the hype around Bitcoin was little more higher, but it was not that much. But after 2016, probably after 2017 to be precise, the hype around Bitcoin went up like anything. It was unbelievable. And in 2019, I thought there is something does not seem right, and I think I should revisit whatever I was doing. After 12 years in the banking and financial services, I kind of wondered, why is it that every 4 years there is something significant happening? something significant that actually affects the global markets. And after 8 and 12, now in 2020, after an 8-year gap, again the global markets are down. But if you look at it, let me get back to myself. Once I did the blockchain course, things kind of opened up. I was able to, reach out to people in different countries. And instead of working for a company, I directly started working with online counterparts, probably people from other countries. Since then, I've worked with a New York-based startup, I've worked with a Chicago-based startup, and I've worked with a Canadian startup. And currently, I'm working with a company in Sweden. So the thing about blockchain, when it comes to the first 3 sessions, you would have got an idea about what blockchain is. It is a technology. But when
sorry, sir. Sorry to interrupt you, but the participants are not able to hear you clearly.
Yeah, is this better? Is this doing better now?
Participants, is it audible clearly now?
Yes, ma'am.
Okay, thank you.
Well, it's okay. Even if you missed out the beginning part, it's okay because I was more or less giving a self-introduction. Well, coming to the point about blockchain, let me start off by saying that when you're talking about blockchain and banking, blockchain as a technology has the ability to disrupt banking. When I'm talking about disrupting banking, I'm actually talking about fundamental changes. Right now, what we are following is centralized banking. So when I say centralized banking, see, all of you are commerce students. So there would be some amount of accounting concepts that I'm going to talk about. There are going to be some amount of economic concepts that I'm talking about. And all of this is going to be with the perspective of banking. When we are talking about financial services, it is the RBI who actually looks at the entire thing. Okay, who frames the guidelines, make sure that investments and right from the account opening to investing expenditure, they have a certain framework in place. Blockchain as a technology can entirely disrupt that. Because when you look at blockchain, it is not something which is centrally controlled. It is decentralized. You would have heard certain words like immutable, distributed ledger. So what this basically means is, when I say distributed ledger, imagine that you've got a ledger, which is the same as your accounting ledger. Okay, but it is distributed. So it is not saved entirely in one computer. How do you realize that? It is saved in everybody's computer. Every transaction that happens is saved on each and every participant's computers. Now you say if it is saved in everybody can access it, everybody can see it. But no, all of that is encrypted. So because it is encrypted, nobody else can see that. People won't be able to figure it out. I'll show you once a transaction takes place, how they are recorded. I'll just give you an idea of that. But let me build on the topic first. So when I'm talking about disruption in blockchain, disruption in banking through blockchain, what blockchain can do is it can be everybody, all of you who are actually in this meeting, each one of you.
Some background noise because of which you are not very clear.
Okay.
Because many students have, participants have written in the chat box regarding the same.
So let me clarify that this concept is basically they were scared because Bitcoin works as a hedge. I'm saying this, the price of Bitcoin is inversely proportional to that in place, which kind of make it much more prone to tackle inflation. So when we're talking about cryptos again, now once Bitcoin came in, Bitcoin did not have certain features. Another crypto, which is much more common. Now, Ethereum, what they did is they used the same platform as that of Bitcoin. They used the same platform as that of Bitcoin and added a programmable feature to it. So what people can do now is they can program specific applications or specific requirements and actually add it to the Bitcoin code. So if you'll see that the number of people on Ethereum is actually increasing. And even if you look at the price, I'll show that to you in some time. I'll just share the screen for a moment here. I'll just need a thumbs up from you guys once you're able to see my screen. Are you guys able to see it?
Not yet, sir.
Not a problem.
But it has started sharing.
Okay.
Yes, it's visible now.
Okay. So now if you look at this, I'll just show it to you. Now, when we are talking about the price movements, okay, when I say that Ethereum is more of a platform that builds on blockchain, that builds on Bitcoin, what I'm saying is that using Ethereum, you can create much more applications. Now, you remember that I told you about Google Pay, but we discussed about Google Pay just now. So people can actually use that similar idea and build applications on Ethereum. And all of these will be decentralized. So there will be no central person. There will be no big man on top sitting and looking at it. There will be no CEO, nothing like that. It will more or less be controlled by all the peers on the network. Now, if you look at Bitcoin in the past 1 year, see, in April 27, 2020, okay, that is exactly 1 year from now, its price was $7,785. And currently, right now, it is trading at $55,281. So if you look at the calculation, if you say 5, this is the price as of today divided by the price that is 7785. I mean, we are just ignoring the decimals here for the moment, 7785. So if you look at the rate of growth, it is not growing in percentages. It is growing in times. It is growing exponentially. You will not say it is grown up by 710%. If you generally look at cryptos, people will talk in returns by this much times. So it has grown 7 times. This is, I'm talking about Bitcoin. And when I'm talking about Ethereum, see, the reason I'm showing you this price movement is so that you can gauge what kind of asset it is turning out to be. So if I look at Ethereum right now, the price of Ethereum 1 year ago was $196. And right now it is 2,564. So from a proportion basis, 2564 by 196. So in the last 1 year, Ethereum has grown 13 times. And if I talk about percentages, it is 1,300%. So this much increase, and this is in 12 months. Just imagine something like this in the stock markets and people will go crazy. They literally will. Is 13 times bada hai. So if you actually look at it, in the last 1 year, what is happening is there is a lot of pressure on the US dollar. And when I'm talking about US dollar, the reason I'm saying US dollar is because that is a global reserve currency. So if people have to transact globally, generally dollar is the currency we use for conversions, for base conversions. So here, when you look at cryptocurrencies, it is growing in leaps and bounds. And compared to Bitcoin, although Bitcoin is priced at $55,000, if you look at the rate of return, Ethereum is twice that. It is 2 times the percentage return when I'm talking about it. Ethereum is twice that of Bitcoin. Now, you would be wondering what this has got to do with banking. Now, let me come to this part. What is happening is with more investments in the crypto domain, what is happening is people are putting money in it. And where is that money coming from? It is coming from the current financial system. If you look at it, when I said that it is inversely proportional to the dollar, what I was saying is that people who believe that the government regulation, the government systems are not good enough, or they should be better, what they are doing is they are looking at cryptocurrencies as a different asset. It is a digital asset, but it is still a different asset. So the government structures, again I'm saying government, I'm talking about globally, all the governments, they don't know how to classify it. So people don't know. In some countries it is banned. In India it was banned until now. Right now it is not banned, but the government is about to come up with regulations. In US, they are actually trying to find out, classify it. So there are different ways in which they are classifying it. For cryptos, for one crypto product, they are putting the say SEC in charge. For the other, they are bringing the FinCEN that is in charge. FinCEN is the financial network, financial task force, like how we have our economic wing. So what is happening is in Canada, it is much more open, but in Sweden, they are using cryptocurrency. So each country has a different way of looking at it. China, when it comes to China, they were planning to introduce a digital yuan, where all of their currency will be through digital means. This was when the German banks said that we also want a programmable euro, something that is on lines with crypto. So although every government wants a crypto, they don't know what to do with it. Now, coming to the banking part of it, when I say that it can disrupt banking, just imagine if I am able to send money to you, or you are able to send money to me. Okay. We will have to route it through the banks. Can you imagine how many charges would take place? There are charges. Bank does have an intermediary charge. From you, when you look at enterprise point of view, bank does levy some amount of charges. So all of those charges can be removed, and only a fraction of those charges will be paid to keep the network alive, to keep the network functioning. Now, when I'm talking about those bank charges, I'll actually talk about, just a minute, I'm stopping my screen share. Yeah. So here what I'm saying is, when we're talking about blockchain and banking, there are different aspects of banking, okay, that it is going to disrupt. Let me start with DeFi. Okay, when I say DeFi, what I mean is decentralized finance. Okay, just like I said, right now we have a centralized finance, and then we will have DeFi. I believe somebody is raising their hand. I believe they have some question or something. I'm sorry, I'm not going through the chat. Yeah, so if you have a question, please unmute yourself and ask it. It's okay, no problem. So what I was saying is, when we are talking about cryptos, okay, when we are talking about cryptos in banking, it is important to understand the concept called DeFi, or decentralized finance. When we are talking about decentralized finance, okay, earlier it was just fund transfer between two people. But gradually it began to increase. In the last 1 year, there have been a lot of decentralized exchanges that have come up. When I'm talking about decentralized exchanges, there is no company, there is no office, like how you have a stock market. Like that, you've got a crypto market too, where people are trading in cryptocurrencies. So when we are talking about cryptocurrencies, you will have crypto trading pairs. I'll show you a screen view of Binance, so that will clarify this. But people started trading cryptocurrencies, exchanging cryptocurrencies. Then decentralized finance they said that we need to create more liquidity. Is this good enough? You're saying that you're not able to hear you. Is there anybody else facing the same thing? If yes, please drop me a message on the chat. I'm looking at that. I just got one message saying that it's not audible. Okay. Yeah, I think it should be clear.
No, sir. Very much you are audible. Very much you are audible, sir.
Okay. Thank you, madam. So, when I'm talking about decentralized finance, when I'm talking about exchanges, new products started emerging. In the traditional banking system, how did new products come up? This is how it came, right? First, it was you make a savings bank account, you save your money there. And then the bank started lending. So the lending function started. Same thing is happening in crypto. You've all heard of crowdfunding and crowdsourcing. So those are concepts that emerged after crypto, where individual people start to fund a project. And once the project kicks off, you put all of those things on the blockchain, where people can raise money. I think 2 people have raised their hand. If you got any question, please shoot out. It's okay, I'm here. I'll answer that. So when we are talking about cryptos, or when we are talking about crypto related products, you will see that there are cryptocurrencies which are pegged to commodities like gold. Okay, you will see that there are other derivatives of Bitcoin. Okay, these derivatives of Bitcoin are called altcoins or alternate coins. So just like how a derivative instrument works, it entirely depends on the asset on which it is linked. So if the main asset, the principal asset, if there is some change in that, the price of the derivative also takes a hit. Just like if the price of Bitcoin starts changing, it is the altcoins, that will have a similar or probably proportionate impact. So altcoin, some examples of altcoins are Litecoin. One of the okay, another person is saying that I'm not audible. What I'm saying is that once there are related derivatives, their price also start changing. You can see some of these altcoins. The names are Litecoins, Dogecoins. Dogecoin is very famous now because of Elon Musk. He has been popping that name quite often. So that is a very common name of late. And other than these two, there is a third type of crypto coin called a stable coin. When I'm talking about stable coin, that is linked to proper currencies, federal currencies. So one of the examples is USD Tether. So that is linked to the US dollar. So what is happening is the coins or cryptocurrencies are emerging, which are linked to financial products or things that operate on financial products. And this is where banking will be disrupted. Now, if a banker, if a hedge fund manager, you already know that mutual funds are kind of coming down, investments in mutual funds and SIPs are coming down because people are using apps to start investing themselves. They are not looking at mutual fund managers for assistance. So they are using these apps to start investing on their own. Similarly, when it comes to cryptocurrencies, there are new products which are coming up and the banking system is going to be disrupted. Now, if you have investments, people who are pooling their cryptocurrencies, okay, they swap each other's cryptocurrencies for liquidity. So if I have a cryptocurrency and I don't want to sell it, I'd rather give it to somebody else, exchange it. You start creating such instruments which the traditional banking system has. And all of this comes under DeFi or decentralized finance. Okay, just to put it in perspective, I can say that, okay, for instance, you have got IPOs. In your 11th and 12th, all of you would have studied issue of shares and issue of debentures. Now, let me give you a practical instance that happened. Okay, now when you issue new shares or new debentures, okay, there is a process that you first apply for share application. I guess all of you would have seen the journal entries or done the journal entries. You do a share application, then you do a share allotment, then there is a share refund, excess amount is refunded. And once you allot, once you get the allotment, you get the share certificate. What if all of this could be done on the blockchain? Because in 2018, World Bank issued a bond that was a proper debt issue. And in affiliation with the Commonwealth Bank of Australia, they released a bond called Bondi or blockchain bond. So what this is it is a normal debt instrument, nothing special about it. Blockchain hai karke, there is nothing special about it. What they did is, in this case, everybody who was interested will join that network. They will apply you pass a journal entry, right? Saying that share application debit to cash bank because your cash is going out. And once you are allotted, you pass an entry saying that share allotment account to share application account, and you move it from share application to share allotment. All of this will be done through the blockchain. So each and every step, okay, it is in the network that will be taken care of through the blockchain network. Okay. So what this blockchain bond, what happened is when they raised it for the first time, the World Bank, the blockchain bond, they were able to generate 110 million Australian dollars in that bond issue. And in 2018, that's what they did. In 2000, just a moment, I think somebody is not on mute. So yeah, so what I was saying is, in the second tranche, that was the first tranche, they raised $110 million. In the second tranche, they raised another $50 million. That was probably in 2019. And both of the bond issue was successful. This is probably a 30-year redeemable bonds that I'm talking about. So both of them were successful. it worked well. So that was an actual case. I can probably share. Wait a minute. I'll share that link. I think I have covered some of it. I'll share a link with you on the chat group so that you can have a look. More or less, I'm going to share a couple of links. You can have a look at this later on after the session. It's just for your information. So that bond issue took place. So when you're talking about a proper IPO, that is through the blockchain. Okay, proper debt issue which happened through the blockchain. Now, I'm coming a bit from the cryptocurrency to what the general company framework for anybody who is interested in working with banks and all. This is just something you can show off during the interview by saying all these things. I know these things. So there's another instance. When I'm talking about this bond issue, you can understand that these are the roles of an investment bank. And by doing a bond issue, they were actually able to replicate the functions of a traditional investment bank using a blockchain network. So this system, when they launched that system, Microsoft did a systems check to find out if the entire system is working properly. So there were different layers involved in it. But again, I'll share the link and you can find out more about, yeah, just a moment. I think somebody, just a moment. I think it's, oops. Yeah, I just have to get it. Just a minute. I'll turn on the light. Yeah. Is this better now? Hello. Yeah, is this better now? So when I'm talking about the bond issue, an investment bank, of the traditional functions of an investment bank are done through blockchain, and it worked perfectly well. I'll give you another instance of where banking functions can be replaced by blockchain. If I'm talking about say trade finance, okay, you want to import export with some counterparty in some other country. When you're talking about trade finance, what is happening is the importer, he will go to his bank, he will get a letter of credit, and that letter of credit he will share it with the exporter's bank. And once the exporter ships the consignment, that letter of credit will be encashed. So there is a whole process which the traditional trade finance took place. Now, using blockchain, IBM, you would have heard of IBM. IBM actually introduced a live case where people who were shipping cobalt from Africa and Europe, they were importing it in America. So when we're talking about cobalt imports, it was coming from Africa and Europe. So when the letter of credit had to be raised, that was raised through blockchain, where a blockchain network was used. So once they started shipping, okay, they used to log that, see, this is where we are shipping from. This is the logistics amount. This is the transportation amount. This is the material amount. And all that billing used to take place. So all of this was recorded on the blockchain. And once the shipping started, each and every person, once every layer was all of the different layers, right? Once you leave from here, you have to stop at different port. You reach in US, you unload there, you go to a different transport person. All of these functions were encased on blockchain network. Okay, that IBM did the blockchain network thingy. So what happened was the letter of credit, okay, which had to be raised from one bank to another. Typically, both banks, they levy some amount of charge. But when you're doing it through a blockchain, what is happening is you have got an automated functionality called smart contracts. So as soon as the importer receives the consignment, that contract triggers and the exporter, he receives the money. So when I'm talking about trade finance, the entire procedure, it generally, if you are saying if it takes 30 days, that much amount of credit, it takes more than 30 days to settle that credit, but at least 30 days, that credit is blocked. Okay. And even after the transaction takes place, it takes 2 or 3 days to process the transaction. All of this can be done pretty quickly on blockchain, probably on the same day itself. Even same day I'm saying is late. Generally, it is close to real time. So these are banking functions which can be replaced by blockchain. Excuse me. So if you have any questions till now, please, I'll just have a look at the chat window. If you have any questions, please fire away.
Hi, sir. Am I audible?
Mm-hmm.
Sir, so basically, when we talk about replacing the banking system with something like a blockchain, what do you suggest that all the mining activity that is carried out within an economy, should it be done by the central bank?
Well, see, when you're talking about mining activity being done by the central bank, you are mixing a couple of concepts here. First of all, when you're talking about mining, okay, I'll actually share the screen and I'll show you that mining part. Just a moment. So what you're saying is here there would, I hope you can see the screen now. So when you're talking about the central bank, what you are essentially saying is that in a blockchain, it is the protocols, the codes and the protocols which determine how the transactions work. The moment you say that the central bank has to oversee this, what you are saying is that there is a human being sitting on top of the protocol to decide which way the protocol functions. But what blockchain can do is blockchain can give all of us the power who are in the network to decide how it is happening. Now, if I say that, I was talking about Ethereum, right? So I'll just show you this. When I was talking about Ethereum, okay, you can actually check out this website too. It is etherscan.io. So what is happening is when you are, see, in your case, the question that you were asking is, if the central bank will have an oversight over the miners, something on that lines. Well, here I'll show you. What is happening is, these are the transactions. When I say latest transaction, I hope you can see this.
Yes,
these
sir.
are the transactions that are being recorded on the Etherscan network right now. Okay. So you can't understand, if you look at this, you will say, "Arey, ye kya likha hai? What is this? I can't understand anything." But all of this is encrypted data. Okay. So these transactions are taking place regularly. And once a set of transactions have been recorded, when you're saying mining, remember that recording these transactions and recording these transactions in a block, that is what you're saying is mining. Okay, just to clarify, mining is not I don't know what your idea is, but this is what mining is. Every transaction that takes place, it is recorded in the network, and a pool of transactions are recorded in a block. I hope you can see the screen now. The latest transactions on the right side, you will see that there are miners who are recording, the people who are recording these transactions are the miners, and people who are creating the blocks are the miners. Okay, so what is happening is all of this is being fed into the system. It's the same as tally mein entry mar. It is the same as that. But only thing is the blockchain functionalities make this much more secure.
Right, sir.
Okay, so there is no way that a central bank can sit on top of this, because there are codes and protocols which actually look at the functioning. And once you have smart contracts in place, they automatically settle. So all the financials can be taken care of automatically using the smart contracts. I hope that answers your question.
Understood. So basically, what a function of the central bank in an economy is majorly to control the inflow and outflow of currency into or out from the economy. So how can it be controlled in a blockchain environment?
See, in this case, let me put it in perspective. When we are talking about central bank controlling it, when it comes to the central bank control, I'll just stop the screen share for now. See, when we're talking about central bank controlling it, what you are saying is central bank creates the rules. Central bank creates the guidelines. Okay, central bank tells the other banks this is what you're supposed to do. Central bank tells that you have to hold reserves with a statutory liquidity ratio and cash reserve ratio. You have to hold it with us, and you have to maintain these much ratios. These are generally the things that the central bank does. Okay, when in a blockchain network, you don't have to tell people that. all the miners together, together, they control the system. Okay. So when every time you have to bring in such points, such regulations, conditions, you introduce those protocol using the programmable function. So once you introduce these protocols, what will happen is you have to adhere. If you want to be in the network, you have to adhere to that protocol. So without that, the system will not allow you to make any transactions at all. And all the transactions that you are done, they cannot be changed at all. They are immutable. It cannot be altered. It cannot be changed. Tamper-proof system. So like I said, the people in Reserve Bank can actually be replaced by algorithm. This is the concept. I'm talking conceptually. I'm not talking practically कि वहाँ पे से लोग को हटा के program कर दो. I'm just talking conceptually. People in Reserve Bank can be replaced by algorithms. That is what the idea is. This is why the RBI is not comfortable with it. Another thing, just to, I am still giving you a realistic example. This is something that is happening, but I don't want to raise an alarm or something. Are you people aware that there is litigation against the Reserve Bank of India? This is something that is happening right now. You can do your research on that. There is a public interest litigation on the Reserve Bank of India. This happened after multiple banks in India collapsed. I'm assuming that everybody here is within India. I hope there is nobody outside India in this session. So the reason I'm saying is this: people in India would have an idea of what happened with the banks. About a decade ago, it was UTI Bank, which was rebranded to Axis. And in the recent times, it was India Bulls. We had a thing with PMC Bank. We had a thing with Yes Bank. There were questions about HDFC Bank's auto loans. There was increasing NPA was the standard discussion in the media. But what the media won't tell you is there is a public interest litigation against the RBI, saying that multiple times this happened, but the RBI did not enforce any new rules to make sure that investors don't suffer. When such things happen, what did the RBI do? RBI said that you cannot withdraw your money more than 10,000, 20,000. They fixed those limits. But why do you need RBI when you can actually program it in the protocol, blockchain protocol? I'm just comparing. I'm not making any statement that this has to be done. I'm just trying to relate so that for your clarification. So these are the rules that the RBI sets up. So why not put all the government conditions, whatever the conditions the government is saying, create a protocol on blockchain and implement it. So when such events happen, when you talk about all the previous banks, PMC and Yes Bank, who was taken into account? Was anybody from the RBI held responsible for this? No. But when you're talking about using blockchain, all of these things will be flagged because they will say that the KYC is not updated. I was about to come to the KYC in retail banking and blockchain, but the KYC is not there. The minimum conditions are not met. The protocols are not working. Even the RBI has protocols, but they failed, right? And how did RBI change that? They did not do much. This is just to put it in perspective. And if you want, you can do some research. I leave that to you. You can do some research on the public interest litigation against RBI.
All right, so just one final question, if you may allow.
Yeah, definitely. See, yes. Just to be clear, I would prefer to answer as many questions as possible. I would rather give you, I would rather guide you and channelize you because this is an ultimate topic. There are lots of things. I would be glad if I can answer more questions. I think that would give more clarity to you.
Right, sir. Thank you so much. So in a developing country like India, there are disruptions happening every now and then. The biggest example was COVID and then elections and whatnot. So in such a disruptive environment like India, how do you think that an economy can be completely controlled in a decentralized manner where everyone has a difference of opinion?
See, the best part about decentralized is whenever you're making transactions, you don't know who you're making transactions with. See, if you're going through centralized, because of the centralized structure, you directly interact with other participants. And that interaction leads to issues. Or when you say that we are a developing country, I'm saying that you can interact with anybody on the planet. As long as you and they both have internet connection and access to these apps, rather decentralized apps. What I'm saying is that we have to adapt to the new technologies. If there are other countries who are adapting to it, I'll also show you some instances of where crypto is going now. If other countries are adapting to it, it is high time even we do. And when you say that we are a developing country, for how long will we be developing country? As long as we don't adapt to new technologies. If we do adapt to new technologies, there is nothing called as developing country. We have adapted to it, and we are putting it to use. We're putting it to use. Now, when I say that IBM did a thing for trade finance, when I say that IBM did a thing for trade finance, when I said that Microsoft did a system check for the World Bank bond issue, what happened was, these cases, those companies were testing the systems. Okay. But the idea, the conceptual idea, that is something somebody else came up with, right? And you put that to use, you applied it. These are the things that we have to do. We as a country have to do these. And only then it would make a difference. Well, I'll do one thing. I'll actually switch to the part where cryptocurrency is evolving. Now, I was talking about decentralized finance. And when I talked about decentralized finance, I also said about decentralized exchanges. When I say decentralized exchanges, these exchanges are not, although they function the same as, just a moment. Yeah, although they function the same as our stock market or stock trading. See, if you look at this, I hope you can see my screen now. Here I've opened up Binance. Okay, this is the Binance trading window. So here you can see that there are different spot markets and you've got future markets. But in all of these cases, what you will see are cryptos. When I say BTC, USDT, what this says is Bitcoin and USD Tether. USD Tether is a stable coin that is pegged to US dollars. When I say XRP and USD, XRP is the code for, just like you have stock tickers. You say REL, matlab Reliance, you say ICIC, matlab ICICI ka stock ticker. Just like that, you have all these tickers for each cryptocurrencies. And all of these cryptocurrencies, see, if you look at it, it is the same, this trading window. It is the same as what you see in the, when you're trading in stocks. But the difference comes is, this is on the blockchain network. Okay, your stock is on DMAT. So you get a DMAT, you get your certificates in your DMAT account. But when it comes to cryptos, where will you get anything? Where will you get your certificate? So there you have a concept of wallets where you can store your cryptocurrencies in wallets. Just like in the earlier phases, I told you Swiggy wallet ka concept and Zomato ka GPay ka wallet ka concept. This is where it came from. So all of these wallets you start using to store your cryptocurrencies in. And because the wallet is encrypted heavily, your wallet address is 16 digit or 32 digits, and it is all numbers and alphanumeric. Because it is encrypted in such a way, there is high level of data integrity. And the data once entered in the network cannot be changed. Now, this is just a trading window of Binance. So if you see, you've got different options, like you've got markets and you've got trading features where you can convert from one cryptocurrency to another. So these are all different functions. Please, you can create an account on Binance. It is free of cost and you can check it out. So these are some of the things I would actually insist that you check it out for more information. All of this is part of DeFi. I'm talking about decentralized finance. Okay. So these are different things. And even if you look here, you have got options like a Visa card here, where you've got a banking product. You've got your debit card, credit cards, right? Now you're having crypto cards. You're having crypto loans. You've got swap trades, right? Where you swap one commodity for another to do your alternative investments. So you have a swap option where you can create more liquidity in the crypto markets. Yeah, if anybody has a question, please fire away. Please fire away. So these are different. See, this is the wallet that I was talking about. When you deposit and withdraw, I hope you all can see my screen, where you can deposit and withdraw. You've got different kind of options in this. Okay. So these are all decentralized finance in the making. So right from derivatives to trading to margin trading using Visa cards to loans. You can also take loans in cryptocurrencies. So these are all essentially banking products, and all of this is decentralized. If you say Binance operates on certain protocols. If I look at, you can search whenever you go, you'll have an option to search for white papers. Even if you do Binance, if you want to find out more, you can actually do a quick search. When I say Binance white paper, you can see all these white papers, which will actually describe how the entire protocol is structured. So it is very simplistic. People can actually find out more about that. I insist that you check it out. These are some of the research that I'm just giving you more like a homework. But if you start searching on it, you will understand what is happening live in the market right now. Because these are things, like I said, it can disrupt banking. So you don't have to actually go to a company, go to an office 22 days a month, sit there, work for 9 hours a day. And at the end of the month, you expect, okay, I'll get my salary credit in my bank. Here it is different. There are different ways in the crypto assets work. So these are some of the avenues I'm giving you where you can actually research, you can find out more. And you actually find, because the crypto market is booming, you can actually find a lot of jobs here. You can find a lot of jobs in blockchain and in crypto. Now, when I was talking about cryptos, okay,
sir,
yes, madam.
Yeah, there is one question in the chat box. Is there a particular platform available to trade in cryptocurrency?
There are many. First of all, as a finance professional, both me and everybody else, I am telling you, before you invest, you have to do your own research. If you are putting your money in it, you are responsible for it. Nobody else is. So coming to the crypto trading, there are different types of trading. Okay, platforms that you have. There are a few Indian crypto exchanges too, like WazirX. You have CoinDCX. These are all pure Desi crypto exchanges. But obviously, some of the funding also comes from offshore partners. So these are some of the exchanges. You can check it out if you want. Okay, when we are talking about, before we actually go into the trading part, like I said, when you're trading in stocks, you get your certificate in your Demat account. Okay, and that is obviously it is kind of proof that you have a position in this. You have this much number of shares. Now, trading can be of two types. Either you are holding position or you are doing CFD trading. CFD trading is price movements pe trade kar raha, intraday trades jaisa. Okay, that is CFD trading. But you are not holding positions, you are just betting on the price movement. So even in crypto, you have both of them. You can take crypto, you can hold it in your custody, or you can just trade on the price differences. Both options are there. So now when I'm talking about holding the Demat certificate, that is custody service in traditional banking. In crypto, okay, when we are talking about crypto, here also you will need treasury services. Just a moment, I'm just, okay, I'm just seeing the chat now. Yeah, when we are talking about the custody services, okay, is there, when we talk about decentralization in system, I'll get back to these questions. If you have any more questions, please put it in the chat box. I'll have a look at it in some time and I'll answer all of them. So when we're talking about crypto custody, you will need to have a digital wallet, that is specific crypto wallet where you can store it. So now these custody services are part of custody banking, and even that services is being adopted as part of the decentralized finance. So now from cryptocurrencies, there is a new trend, that is crypto art. It is called NFTs or non-fungible tokens. So this is one of the platforms that I'm showing you. So when I'm talking about crypto art, okay, so people generally draw something and they sell it hard copy. Now what they're doing is they're putting it on blockchain. So you will have different kind of all of this. Even for people who are interested in online gaming, they buy stuff when they're playing online. I'm talking about hardcore gamers. So people who are interested in esports. So this is the site OpenSea.io. I'll share all of these links in the end. So these games, when you're playing these games, people spend money in that also. So what the esports or e-gaming is doing is they are also adopting crypto. So this is again where the banking is going to be affected. So people who are buying, they won't use the banking services, they'll use crypto services to buy. So these are all in-game characters. When you are using, if you are buying new, chat emojis for your WhatsApp, people do that. People actually buy that. So if you're buying WhatsApp chat emojis and all, you can buy it through cryptos. So this is a loss of business for banks, isn't it? So there are different ways in which, and like I said, these are assets. These are all collectibles and artworks. So when I'm talking about these artworks, where will you store them? Again, you need custody services. So once you buy them, you will save them in your crypto wallets. So these are services of custody banks. Okay, when when you're trading in stock markets, you know about depository participants, you know about clearing houses. So all of these roles are being done by decentralized exchanges and crypto service providers from, just a moment, I'll just stop the screen share. Yeah, if you say from investment banking to custody banking, these services are being picked up by the crypto community. All of this comes under decentralized finance because there is no one person sitting on top. The CEO is not sitting on top and telling you person, you go there, do this work, you person, you go there and do the other work. It is the protocols that is taking care of all this. And who decides the protocols? The miners who are part of the network. So all of this is decentralized finance. For example, I'll just give you an arbitrary example of all the people who are in this webinar. Assume that we created a blockchain network. Okay. Now all of us will start recording the transactions that is happening in the network. Okay. People who are not part of this seminar, they might look at this saying that, okay, whatever that currency is, I think it is going to work. So they start using that currency, they start trading in that currency, or they start making transactions in that currency. So we will keep on recording it on our network. Okay. And once we keep on doing it, that one person shares it with another, the more number of people using our tokens or our coins, it increases. What is happening is our network will go bigger. The more it grows bigger, that fund pool, the ones that we are creating through mining, that fund pool will also keep on increasing. The transactions will keep on increasing. So the more people are involved, you will have a store of digital value. And what you will use to use that services, you will use services like crypto wallets, crypto cards. So these are different services that you have under the decentralized finance. Okay. So now I've talked about investment banking and how blockchain can play a role in it. Second thing I talked about is custody banking. Now let me come to retail banking. When I talk about retail banking, I'm talking about your current account, savings account, fixed deposit, recurring account, all those functions. So all of those functions, what the bank does is, the bank has to go through a specific format. You go to the bank, you give them a check, you make a UPI payment, open the account, give them documents, do the KYC. All of this can be done on the blockchain. You say if you're interested, you put a request to join the network. The bank accepts you in the network. You share all the documents with the bank. Okay, the bank confirms it. Just like your share allotment, share application, the bank accepts it. Once you are part of the network, you will have access to your own wallet. You will have access to your own cards. Just a moment. You will have access to your own crypto cards. So these are under KYC. Development adopted crypto. Yeah, I'll answer that, Dr. English. So these are different features which can be adopted. Okay, but right now a bank earns the most number of money through fees and charges, interest on loans, loan advancements, fees for such services. So these are the places where bank earns revenue. But think that you've got a decentralized system where all that money, charges are given to the pool of miners. All those rewards are given to the pool of miners to make sure that the network is active. So a lot of expenses that the bank will incur will actually be negated. And the bank can be redundant. I know it might sound very sound like an extreme statement I'm making, but yes, theoretically it is possible to actually to push the traditional banking to redundancy, to obsolescence, and we can actually shift to a technology. Now you all know that when you're using Google Pay and Paytm, things are becoming very easy. But for people 30 years ago who used the passbooks, do you think that they can ever imagine Google Pay instant settlement? They cannot. They still won't find it difficult to accept it, and they'll still line up outside the bank to get their passbook updated. But you know that a pool of miners, okay, it's MINERS, it is not MINORS. So the thing is, for people who are using Google Pay and Paytm, they know that instant transactions can take place. But for all that, you generally for Google Pay, you don't pay any charges, because what they are doing is they are linked to your bank and they are just giving it a service. So, but there are other features for which the bank charges you money. So those things can be negated. And if the banks don't get money, how can they function? How can they keep their day-to-day operations going? So their going concern question mark. There's a question on the going concern thing. So when I was talking about retail banking, from your opening your account to your card functions to your charges, all of this can be onboarded on a blockchain network. It can be onboarded, but still things are being worked out. You know how to do it. So there are different people in this. If I have to put it kind of a line or something, there are developers who are responsible for creating that system. There are consultants who are responsible for coming up with strategic ideas on how we can do it. Okay, there are finance people, accountancy people who will handle the events, who will act as miners probably. But these are features, where how we approach our roles, how we go to work can change. This is something that blockchain can do. Okay, so this is just what I have told you is, it is kind of a mix between you're looking for a job and you create a job of your own. Blockchain can give you that option to create a job of your own, where you yourself have found something to work. You're saying that this is an interesting project, I'd like to work on this. If it is successful, you get paid. I think it is as simple as that. And because blockchain is very fresh, there are a lot of cases when those ideas are functional. Even now, I'm just giving you another idea that any one of you can work with if you want to. People have cooperative housing societies and all. They do their accounting. You put all of those things on a blockchain. Life becomes so simple, where every person who is on the, actually, I'll rather address the question about the miners with this explanation. So when I'm talking about a pool of miners, for this example, if I say that you have a cooperative housing society, to make your accounting framework, you use a blockchain protocol. So what you will do is, if you've got 10 people in the building, you put all of them in the network, they are miners. For every transaction that take place, okay, they will all update their transaction in the distributed ledger. So each one of those 10% will have the ledger. Each one of them will update that ledger. And once there is a certain number of transactions, they are clubbed together and they are put it in a block. That's why it's blockchain, right? So they are clubbed together and put it in a block. So what is happening here is, every new transaction, the miners keep on processing and keep the network updated. So even if you are offline, the moment you come online, you will update that. And once you get updated, you are at par with everybody else. And you will have the entire books encrypted on your account. So these are just some examples. When I say pool of miners, the miners, instead of I think the earlier candidate, when he mentioned that there was what will the RBI do, when you question about the RBI. So when I'm talking about a pool of miners, what they will do is they will enforce those blockchain protocols and they will record those transactions in sort of in lines what RBI does. It is the miner's job to make sure that the network remains updated. I'm not saying it's job and he has to go and do it. These are system protocols. So these happen on the system. Okay, I hope that gives you a rough idea of how it works. And another thing, when we are coming to the pool of miners, I thought in the beginning I mentioned that Bitcoin is much more resistant to inflation. When I say resistant to inflation, I also said that it is inversely proportional to dollar. So if dollar falls, Bitcoin will rise. So every 4 years, okay, whenever a miner they record transactions, they get a reward. Okay, there is a fixed amount of reward. Every 4 years, that reward amount is cut in half. For example, I'm recording these transactions. I'm just giving you a traditional central finance example. I'm recording transactions every month. Every month, I get 5,000 rupees, for example. Okay. Uh, Here, what in case of Bitcoin, same thing. You will be recording and you will be getting an amount. But in case of traditional banking, if I say that after 1 year, I will cut your salary in half, and you'll be shocked. I said, "Arey, I don't want to work. You give me 5,000 earlier, now you'll give me 2,500 to do the same work." So I will stop doing it, right? Because after 1 year, you're cutting my rewards. Then what's the whole sense? The same thing is the case with Bitcoin. Because the Bitcoin price keeps on increasing, more people jump into mining. So after 4 years, the rewards are cut in half. So because the rewards are cut in half, the number of miners who are there, they will come out. The marginal miners will come out. They will think, I have to spend money on electricity to keep the systems active. I have to spend money on memory chips and graphic cards to do the calculations and hashing and encryption. But I get only half the rewards. So they will come out of the mining pool. So what will happen is the number of people who are processing the transactions, they will become less. Okay. So this kind of works against the Bitcoin inflation. I hope you get an idea. When you look at it, you would be wondering traditional finance may it happens in a different way. How it will happen if you reduce the reward by half? How will that work? Yes, it works because the number of bitcoins in circulation will go down. When there is inflation, what you want to do is you want to reduce the money supply that is out there in the market. With less number of miners, the number of the money supply in the market is negated. See, these are economic concepts that I'm linking to. I'm talking about banking, blockchain. These are economic concepts. When there is inflation, you want to reduce the amount of money supply that is going on in the market. You want to control that. And by doing halving, the process of reducing the rewards into half, that is called halving, HALVING. In 2020 May, the last halving happened. That is 1 year after that, Bitcoin price is now at 55. Before that, the halving happened in 2016. And in 2017, the Bitcoin price shot up to 20,000. So these are just practical events that have happened and how the Bitcoin price is being affected.
So do I mind if I ask something?
Yeah, please do.
So basically right now when we consider Bitcoin or the price of Bitcoin, it is always in relation to one of the other currencies. So
Correct.
either it's in dollars or rupees or
Correct.
whatever we may think about it. Okay, so when we talk about inflation in its own terms, it basically it's in relation to the commodities of goods which are available for a particular amount of price.
You're
Right?
talking about TPP, right?
Right. Yeah. So when we talk about it in that sense, and we see inflation in that terms for Bitcoins was available for $10 in 2010 before the first halving happened. It went up to $150 in next 1 year, which is like
Correct.
15 times. So the things that were available for $10 became $150 just
Correct.
because the supply of it was reduced. Simple demand and
Correct.
supply concept. So if we keep on reducing the supply of it and the demand keeps on going up, ultimately the inflation is going to increase in an economy.
Okay.
So
Let me. Yeah. Tell me. Tell me.
so when we talk about Bitcoin as such, last year it was somewhere around. It started with $4,000 to $5,000 before the
Correct.
halving, and just after the halving happened, it went up to 7,000, and now it has already touched nearly 62 to 63,000.
Yes.
So when we talk about it in that terms, so inflation, what my understanding is, inflation is always in relation to some other commodity that a particular amount of currency can buy. So in
Mhm.
case that is going up every day, so how are we controlling inflation by introducing Bitcoin?
Okay. When I say inflation, okay, in your case, the example that you're putting, you are mixing two concepts. One thing is that Bitcoin is not a legal tender. So right now, when I say legal tender, Bitcoin, a lot of governments are not accepting Bitcoin. So people who are thinking that, who believe that the government regulations are not good enough and they want a different asset to invest in. So they are pouring money in Bitcoin. And when they put money in Bitcoin or other cryptocurrencies, that market cap increases. Okay. Now, when that market cap keeps on increasing, the number of currency in circulation is probably the same or marginally higher. So with the rise of market cap and the total coins in circulation, if you directly do the math, you will see that the price will keep on increasing. So as long as you have people that are putting in money, which is disproportionate to the coins that are being minted, the price will keep on increasing. Now, if you see that right now the Bitcoin price is 55,000, it came down from 60. It cost 60 and it came down from 60. Why do you think it is coming down? Because your mathematical equation of your market cap divided by the total number of coins in circulation, that is taking a hit. The market cap is slowly come down. Because I'll also tell you one thing. When a lot of people put money in Bitcoin, the ones who had Bitcoins earlier, they sold off their cryptos, right? And you will see that most of those people have taken that money and they are doing their own business. They have kicked off their own startups. So you will see that there is kind of a balance where more people putting in money and people who have Bitcoins, they're withdrawing money and starting their own business. So what the price rise that you are seeing, you should not attribute it to inflation. Okay, you should not say that this is because of inflation, it is going this much high. No, it is not inflation. What is happening is there is a ratio. Even now, when we are talking about our currency, when you're talking about Forex, you have got, if you say one USD is say 72 rupees. And after 2 days, you say, rupee has weakened. So now $1 is 74 rupees. So how do you ascertain that? Is it because of inflation? No, it is because of the foreign currency fluctuation. So the same fluctuation you can expect in cryptocurrencies. But unlike Forex, the movements in crypto are really heavy because there are different aspects to it. Because when we're talking about cryptos, right from mining to the regulatory framework, there are different bottlenecks. Although services are increasing, the decentralized exchanges, decentralized, all these products are increasing. But it is kind of, there is still a gap. So just like Forex fluctuations, you cannot attribute it to daily inflation. The same way, this price rise, you should not attribute it to inflation. You should actually look at it as there is that much increase in market cap. Okay.
All right.
How
So
it does.
just one more question regarding the same thing. So
Yeah,
when we introduce a particular currency into the market, so basically each country in the world is a closed economy where if you want to put in money or if you want to withdraw money, you have to do it through certain channels, which is not happening in case of Bitcoins or in case of any other cryptocurrency in that sense. So when we talk about introducing such a currency or linking it with the economies of particular countries, don't you think that the fluctuations in the country's currency would be much higher in case of a decentralized system?
Okay.
And it will also increase the amount of money laundering and passage of money from one point to other without any kind of approvals.
Okay. Let me explain that this way. When you're saying that how much, when you're saying that country is a closed economy, let me kind of correct that. It is not a closed economy. A country is willing to work with another country. When I'm talking about Forex transactions, to a certain limit. And how they decide that limit is entirely up to them. So right now in India, you can get money from outside. You can get foreign currency because that is beneficial for the country. So they are open to that. But when you're talking about outside remittance, when you're sending money, there is a cap. You cannot exceed 250,000 US dollars in a year. I think that is the cap. More than that, you cannot send Forex from here. Obviously, nobody would have 250,000 US dollars a year to send outside. But what I'm saying is these are decided based on certain conditions. Now, when we're talking about Bitcoin, Bitcoin has no demographic or regional barrier. Anybody who is part of the network from any corner of the world can transact. Now, if just assume that I'm sitting here, I've got Bitcoin in my wallet. Now, I went to a different country altogether. Okay, probably say I went to Sri Lanka, I went to Cambodia, and I transact from there. I'm transacting from my Bitcoin wallet. There is no geographical restrictions to it. There is literally no geographical restrictions to it as long as you can access. But the moment I convert it into a fiat currency or the central bank governed currency, that is where the regulation will come in. Before that, the regulation won't come in. Do whatever you want to. But the moment you convert it, that is when the regulation comes in. Now, here to your question about money laundering. Yes, in the initial phases, crypto was used as something for money laundering. It was the case. But you have to think that this technology is really fantastic. And just because the first set of people used it for money laundering and for illegal purposes, that doesn't mean that you say, don't use the technology. I'll give you one actual incident. This is something that is happening. If you look at Canada, in Canada, cannabis and marijuana, okay, these things are legal in Canada. Those companies are listed on the Toronto Stock Exchanges. They are listed. In the US, they are listed on stock exchanges, cannabis and marijuana companies. In India, it is illegal. Okay. But does that mean that any person who is in India cannot trade on those stocks, cannot trade on the price fluctuation of those stocks? That product is illegal in India, but in those countries it is legal. It is listed on the stock exchanges. Can you believe that those companies are listed on stock exchanges? And yes, some of those companies also have crypto coins, which is dedicated for cannabis. I can actually show it to you. These are some of the instances which, when you're talking about money laundering from one country to another country, the definition of money laundering keeps changing. If you are saying that for cannabis in India, if you do that, it will be considered as money laundering. But if you're in Canada or US, it won't be considered. Okay, so that thing again depends on the country's regulation. Like I said, crypto is being used for art. There are a lot of fantastic artworks, from drawings, paintings, fantastic artworks that are put out on sale. So in those cases, okay, not all of those art are really good, but some of those art, they are rip-offs, they copy. It's like, they copy somebody else's artwork, do minor changes and upload. So technically, even that is fraud. But those things are listed, and it is the responsibility of the exchanges to find out, spot them, and remove them. So likewise, when you're talking about AML initiatives, if you're using the blockchain technology, and if the regulators are actually, they have to become a little tech savvy in that, but they can be part of the network and they can govern these things. So yes, there is a possibility it can be used, but yes, there is also a way in which the government can keep an eye on this. I hope that answers your question.
Yes, sir, thank you.
If anybody has any other questions, please fire away. I'll just go through the chat quickly, just to figure out what all questions you have. If you are feeling shy of actually calling out, you can drop a message on the chat box too. Just a minute.
Sridevi has some questions. Sridevi, you have raised your hand.
I think you're on mute. You might just have to change that. But if you are not comfortable voicing it, you can also type it out. I'll go through the entire chat messages now. Try to answer each one of those questions. Okay. Is there any particular platform available to trade in cryptocurrency? There are many decentralized exchanges. I told you 2 Indian exchanges, WazirX and CoinDCX. You can also use Binance, Bittrex. There are many of them. So I won't push any exchange on you, but do some research, because everybody has their own fees. They have their deposit fees, they have their withdrawal fees, they have their transaction processing fees. So you can check it out before you actually make a decision on it. So a very basic question here: what is a cryptocurrency? Okay, I think that was see, cryptocurrency is a digital currency. So right now you are giving cash and taking cash. You're using Google Pay or you're using Paytm. Are you paying anything to them physically? No, you're doing it digitally. So cryptocurrency is just like that only. It is a digital currency, but instead of using cloud systems that Google Pay and Paytm does, it uses blockchain network, which has got higher level of security, higher level of data integrity. Isn't there a problem of redundancy? I think, okay. Isn't there a problem of redundancy and repetition of data in blockchain technology? No, there is actually no problem when it comes to redundancy and repetition, because here transparency is put ahead. Second thing is, if you have it stored in different places, I cannot change it in my computer and say that, see, this is it. So I have to, everybody has a record of it, and it is encrypted and it is kind of compressed. So it won't take that much space. Yes, it does take space, but it won't be as bad as, it won't be that huge. So this is okay. This is still acceptable. And every time you make those transactions, they are clubbed in blocks. So those portions also help as well. So the next question is there a minimum capital requirements to start investing in crypto, or just as shares you can start with? It depends on where you're investing. There are no capital requirements as such, but you need to have some basic amount. It depends from one currency to another, which one you're starting with. Personally, even though I'm a consultant, even though I regularly track cryptocurrency, I don't invest in it, because I have my own reasons that it affects my analytical abilities. Because if I have put my money in something, then how you think is kind of biased, and I prefer to have an unbiased, so I don't invest. But if you want to start, there is no minimum requirement. Generally, you can start $10 to $100, anything from 700 to 7,000 rupees is again. But being a financial professional, I'm telling all of you, if you are planning to invest in crypto, please do your due diligence. The general deviation fluctuations is at least 30 to 50%. 30 to 50% means you will find a trading circuit on the stock markets. People will be shocked and they will not know where to go. But in case of crypto, 30 to 50% fluctuations is normal. That is acceptable. Okay. So before you're investing, please do your due diligence and make sure that you are responsible for your actions. So make sure that whatever you're doing, you spend some time doing research on it. Okay, there's a question from Mehul Soni. So when we talk about decentralization of system in a country, we are talking about decentralizing the transaction system and not the amount of currency that is generated or created in the system or economy. Is that what? Yes, you are correct. So when you're talking about decentralizing, I'm not talking about everybody will become some big shot government person. I'm saying the system in which you're doing it. You can change that. That would make a lot of difference. Okay, this is a question from Dr. Nilesh Patel. Crypto is in the sense of security or privacy, both. See, the reason crypto came out was after the Wall Street crash. Because when the Wall Street crashed, it happened in the US, but there was a global impact. So people thought of that it is the bankers who are responsible for this. So the hedge fund guys, what they did was they had properties. Okay, they kind of collateralized that property, created a debt instrument, and issued it as debt. Once that debt was issued, they classified it into good category, medium category, bad category. Then those loans, whatever securities were issued that way, which went into NPAs, they were downgraded, again collateralized, and again sold off as debt instruments. So ultimately, there was a situation where people did not have money, and all of these collateral loans. What happened with you can say that the PMC case, similar to on that lines. So people lost their faith in banks and bankers. So that was why crypto came up. That was the whole idea and the time when it came up. So security was one thing, distrust against the bankers and the government regulations was the second thing. Privacy and security are benefits that actually blockchain can pitch in. And just to put it in perspective, what is happening with the Indian government when I say that RBI did not take any accountability for the Yes Bank, PMC, all those events. In the same way, in 2008, the Federal Reserve did not take any responsibility for what happened then. So in a way that you could say that it is the disdain for the regulatory, lack of regulatory controls, which also kind of improved this, boosted this. So this is second question from Dr. Patel saying that many developed countries has adopted cryptocurrency. Yes, I know for sure that Sweden is doing, because that's where that's the company I'm working for. It's in Sweden. So I know that they do it. They might have regulated it in their country. Still, they are not able to control terror fundings, which are happening on virtual platforms. Well, see, when you're doing a comparative event, since you mentioned about terror funding, I did talk about the money laundering part. But when you're coming specifically about terror financing, see, the countries who have implemented crypto, their population is very less. And we are like king when it comes to the population. So implementing in our country is going to be very difficult. It is genuinely going to be difficult. Sweden's population is not that much. Probably people from Andaman and Nicobar would be at par with Sweden. So the people are very less. And when there are less people, so how they manage their regulation is different. Second thing is, terror funding for developed countries and terror funding for developing countries, there is a world of difference. Because if you are funding terror events in developed countries, the amount of money you will have to spend is much more. And terror funding for developing and underdeveloped countries, you just have to spend $2 or $3. You will find somebody to do that. It is much cheaper that way. So I don't want to go more into that part, but I think you will get an idea. You just sit and look at the events that happened in the past 6 months. You'll get an idea. It is $1 is 70 rupees. So if one person gets $1 from an American, he can go out and eat a proper thali, proper lunch. So that is the reality. So for him, that $1 means nothing. Okay, can you please explain about the pool of miners? I think I addressed this one. Paul Krugman, or most conservatives feel that cryptocurrency may be a bubble. What's your take on it? See, when we are talking about a bubble, it has some applications behind it. When I said that in the beginning phases, I showed you the percentage changes between Bitcoin and Ethereum. Bitcoin was 7 times high in the last 1 year. Ethereum was 13 times higher. So from 700% and 1300%. Why do you think Ethereum is booming? Because Ethereum gives you a platform where you can create such crypto tokens or crypto currencies or digital assets. Whereas Bitcoin is more or less the first model. That was a test model that people can see this is how it will work. So that was more or less even when you're doing any trials, you have something that is more like, to control. You do that control checks. So like that, Bitcoin acted as the control, okay, or the average, and Ethereum came up where new tokens are being created. So each token has got some benefits. For example, like I said, I was talking about the cannabis companies where they have their own tokens. They use some of that tokens. So for another cases, you say that if you're playing games and you buy certain tokens, okay, everybody who plays games on their mobile know that either you get ads or you will get a pop-up saying that buy something for 1,500 rupees, 1,600 rupees, and you will get this much coins or something like that. That is not cryptocurrency, but it is the same idea. So in these cases, when you're talking about bubble, there are cryptocurrencies which back good and proper functioning services. Do you know that there is a cryptocurrency which can be used for dental services. So there is something called as dent coin. So if somebody wants to get a dentist a dentist appointment, he can pay using the dent coin. And there are certain dentists who accept the dent coin, and they take that dent coin, go to a decentralized exchange, convert it into fiat currency or normal currency, and you can use it normally. So yes, there are genuine good services which are backed, but there are many more which can come up. It is still not hit it. Okay, Dr. Assistant Professor. Okay, thank you for sharing that, sir. This is feedback. Okay, blockchain platform is going to be the next big thing. How do we acquire the on-hand experience? I mean, any courses? There are many courses. There was one thing actually discussed with Madam. When we first spoke, I actually told her that I can actually offer internship programs where I can give you hands-on experience in working on blockchain, cryptos, and DeFi and NFTs. So these are different areas. So I've already spoken to Madam about that, and she'll be sharing the details. So you can get in touch if you are interested in the internship. Even if you're not interested, you just want to discuss about this, please do get in touch, because the more people know about it, the more you will dispel your myths. There are a lot of confusions where people are not clear about this technology. They're not clear about how the digital assets domain work. So the more people understand, the easier it will be to actually put it into work. So please do get in touch. I'm sure that Madam will share the internship program. But right now, I'll just go to the questions. I'll talk about the internship program to the end. I'll just take some more. What all questions are there in the chat? So, excellent deliberation. Thank you, sir. Explained. Blockchain platform is going to be the next big case. The functions of share market and crypto market are the same. Yes, it is basically the same. In fact, even when your primary markets, when you're doing an IPO, in cryptos, you've got ICO, initial coin offering. So people launch coins, people put funds, put money, and that's how they raise capital. And they use, when you talk, okay, I'll give you an actual situation about this. 2 days back, there's something you can actually search for Polygon, and it is blockchain. So one of the persons who was with Polygon, he is an Indian. He said that with the oxygen issue that is happening with the COVID, he raised out saying that we as Polygon will do something about it. So for all people who want to help, who have crypto holdings, you can share your crypto, you can fund us through crypto means. And he also reached out to all the Indian crypto exchanges. They said, we are trying to do something, will you help us out? So he said that we'll do a crowdfunding, and he shared his wallet details. He said, put the funds in my wallet. I'll create a protocol. I'll make all of those things transparent. And he reached out to the crypto exchanges too. So that crowdfunding is taking place. So where he is collecting funds, they will be swapped into fiat. They will be changed into fiat. That money will be used to fund some of those oxygen tanker or plant or whatever. So those things I am not entirely aware how it is progressing. But yes, these things happen where people from the Indian crypto community, they stood up and they said, we'll collect crypto, we'll convert it into fiat, we'll do something about it. So yes, it has got a lot of practicality relevance with traditional banking and everything money that we are using right now, central finance. So from share markets, crowdfunding, yes, crypto has a possibility to be applied. Okay, is Dogecoin a cryptocurrency and why is it? Dogecoin, this is I guess Meenakshi's house. See, Dogecoin, the main reason is Elon Musk. Okay, so it is more like, I would rather say it in Hindi. Elon Musk chavi de raha hai aur kuch nahi. He's hyping it up. So he said, I'm going to Mars, I will use Dogecoin. People who are not going to Mars, they will also buy Dogecoin. Why? So you have to realize that. I'm sorry. So what I'm saying is, these are the things that actually have an effect. So yeah, definitely, if somebody stands up and says, if tomorrow Ambani says that, okay, fine, I'll do Bitcoin. And Reliance employees, they will be told that I will pay in Bitcoin. What option do those employees have? They say, I'll receive Bitcoin. Obviously, they'll receive it happily. It is 40 lakhs right now. But yeah, that is adoption, right? You are increasing that adoption. So that is why Dogecoin is pumping up. Sir, the function of share market and crypto markets are the same. Yes, I think I addressed that one. Backlink. Okay, tomorrow. Okay. So link is to be okay. Is Dogecoin okay? Why is it hot a lot? Yeah, I want to learn about specific cryptocurrency. Is there any specific course for? I think I addressed that. I'll discuss that once again towards the end. What time in future does blockchain technology may be adopted by the government of India in their administration? What about Indian MNCs? The government of, by removing the ban, the government did a big thing. Hats off to them, because see, let's face it, we in India are a little slow to technology. If somebody is really good at technology, we send them to a different country only. Yeah, either you go to US, you go to Canada, you go to Australia, New Zealand. If you're good with technology, go to a different country. That has been the general perception. But just by removing the ban, I think that was a really good achievement. They are still working on a crypto bill. But when they are working on a crypto bill, I should not be saying this, but still I am. A lot of uncles who are still finding Android mobile phones difficult to operate, they are talking about blockchain. So in a way, although they might kind of release a draft bill, they will have to make a lot of amendments to it. Because right now they are not even considering art forms. Because digital art is a new thing that is happening, and the government is not even looking at the art forms. And in India, art is going to come out from every nook and corner. See, most people can't find a job in bank or MNCs. All you have to do is sit and draw, do some digital art, put it online. You can do that on blockchain, and you'll be get paid in Ethereum, and you can. These are things that can happen. But I don't know if the government is actually taking note of that. I have no. Yes, it is still a developing thing, and let's keep our fingers crossed. And let's hope for the best and be prepared for the worst. So, what about Indian MNCs? I think Indian MNCs have no other option but to follow the government. I don't think there is much that they can do. Yeah, definitely. Oxygen. I'll share the profile details. I'll share all of them. Limitations of the crypto market. Okay, this is actually an interesting question. When I'm talking about limitations, there are many. Because till now, that technology has not been explored entirely. When one of the questioners, he talked about AML. That is a genuine concern. Can you imagine that if somebody sends $10 and he can go forth with terror financing, he has to send one Bitcoin, what all terror activities can take place? So now when I'm talking about that, this is the biggest drawback. People can't find out where it came from. When I'm talking about everything being secure, when I have to trace wallets, tracing wallets becomes very difficult. I'll share some of the articles where I'm talking about crypto scams. I've written about crypto scams and beginner's guide to crypto trading and crypto ICOs. So this is a serious drawback. If there is some, random or uneventful activity, people tracing, in case of central finance, you can trace it relatively faster. For example, what happened in Mumbai, if there was what was spoken, if there was a financial link to it, it would be easier to trace it. Okay, from one bank to another, one bank account to another bank to offshore bank, it will be easier to trace it. But in case of crypto, that is not the case. It is very, very difficult and as good as impossible. So it is extremely difficult. That is one of the biggest drawbacks. I'll give you another drawback. This is for common people who have peaceful minds. We're not talking about money laundering and terror financing. Even they have problems. Okay, there are different types of wallet. If you forget your wallet address, your money is gone. It is so secure that there are those 16 or 32 digits. You have to secure it, save it properly. You have to remember it. It's preferable to remember it. It is your wallet after all. But once you forget it, you can't access that wallet. And whatever money is there is gone. So it's like, if it happens to your Swiggy wallet, it hurts, right? So like that, if it happens to your crypto wallet, you're gone. Another thing is that you also have offline wallets where you can store all that money in a USB drive. If you save it in a USB drive, you're sitting in a rickshaw, it fell down your pocket, money gone. So yes, these are limitations. These are genuine limitations. It happens. It is not foolproof. So yeah, but these limitations are there. If you want to talk about some other limitations, it is that the technology has been complicated to a point where, for people to understand it, it takes some time. So that is, yes, again, a limitation. But hopefully the next generation with you guys and the guys after you, it would be much more easier for you guys to pick up. But for me, being a traditional banking guy, it took me some time to, first 6 months, I couldn't understand where it was happening. So what was happening and where it was happening. So yes, again, limitations. Is there any own Indian coin available? Right now, I'm not sure if there are any Indian coins per se. And it is not right to look at a coin from that perspective. I think it is better if you look at a coin from its functionality perspective. Okay. Let's not be overly nationalistic and let's not be overly racist. Koi bhi country ka ho, it doesn't matter. You look at what functional. This, at the end of the day, this is a financial instrument. You have to look at the functionality that it offers. If, for example, like I spoke about the dent coin for dentist services, you can come up with your own tokens. You can do that on Ethereum. You can come up with your own tokens. And if you think that there is some kind of utility, you should come up with that. You can, because you have that option. So I would say that I'm not sure if there are any specific Indian coins available, but I would prefer utility and functionality. Yeah, could you share those articles? Definitely, I'll share. I've got it pasted on the chat box. All I have to do is press enter. Kindly give 2 or 3 topics on which research can be done in India, especially in social science, commerce management, about fintech. There are many. Can you anything which has got to do with financial and financial instruments? Like I said, when I was talking about the cooperative housing society, accounting for that can be done through that. Keeping track of it can be done. That is one such thing. I'm talking about applications where you can actually apply it in practicality, where you can monetize it. So this is something that you can do. So other things are, if you're taking from commerce and management perspective, if I have to put an example to it, what can I say? Whether it is you're buying grocery from your Kirana stores or something like that, you can come up. I'm saying it is not yet there. I hope you know that when Walmart, Big Bazaar, those things were going on real good, the local Kirana began to suffer. So they created something like that called Asan, and each was part of that, this retail society or something like that. If part of that special purpose vehicle. So they are linked with that Asan, where the transport cost, logistics cost, those things could be reduced because of the economies of scale. So yes, there are many such cases. In fact, I implore you to please think of more ideas, because it can be done and nobody has done it till now. So I actually leave that entirely to you. You can think of different ways to do it, different ways, anything that you want to do. How did GPay come? How did Paytm come? How did MobiQuick was the first one to come. Did you know that? When you're talking about that scan and pay, there's a company called MobiQuick which was the first to come. But right now the trending ones are Paytm and Google Pay. Why do you think it is? One is Google is an American company. 2, Paytm is backed by Chinese funding. And they were able to secure that much fund to scale up. I don't think that MobiQuick was that good. I'm not saying that they are bad, but probably when it comes to this function, the others two actually work much better. Okay, sir, every cryptocurrency has the same process of maintaining transactions or recording. Yes, it is the same. See, the conceptually, the idea is the same. Okay, only thing is how you settle it, the transaction settlements, how you settle transactions, how a transaction closed. So these things are the only ones that are different. But rest of the core is the Bitcoin, the Bitcoin network. Same as the Bitcoin network and Ethereum network was created, but only thing is Ethereum is programmable. And because of that program, you will see a lot of new tokens that are built on the Ethereum network. Can you give the limitations of blockchain platform? I think I discussed this because it is difficult to trace. In case of money laundering issues, it is difficult to trace the funds from where the wallets came. If you lose your wallet or if you forget your password, your money is gone. So these are some of the limitations. And yes, it's complexity. The early, I wouldn't even say complexity, it's rather the wrong perception that it is very complex. That is some of the limitations right now. One of my friend belongs to India. Okay, he used to invest in USD crypto. Okay, present due to if he's supposed to get around 10 lakhs, if he wish to use it some for his benefit. Okay, I don't think Sangepu Puja. I think it is not your friend. I think it is you because 10 lakh.
Sir, my friend only.
Everybody says that only. My friend did it, but you got it. I'm kidding. So
No, sir, to be honest.
I'm kidding. It's okay. So will he go through it? See, what happens is when you have to withdraw, you will also, when you're withdrawing, the exchange will charge some money. And once you withdraw, whichever country you are in, or whichever bank account that you withdraw in, there would be a regulatory scrutiny because you're all in finance. You have studied taxation. So when you're talking about taxation, capital gains tax, how is it taxed? It is taxed the moment you sell it and realize it, not before that. If the market value keeps appreciating, no problem. The moment you sell it and you realize money, that is when it is taxed. So I'm pretty sure that your friend who has 10 lakhs right now, that person would face an impact the moment he withdraws it. And before he withdraws, the exchange will charge a small amount of fees. After he withdraws, there will be the local regulations. So I think this is the questions that I have to know. Would blockchain become inexplicable part of financial system in the future? Well, I'll be the way Elon Musk is pumping up Dogecoin. Dogecoin could be in Mars. But I think that the technology is really useful. I'm not saying that because I'm a blockchain consultant. I think the technology is really useful. It can be done. But the question again is how we do it. So that is something which I think it is the responsibility of the government. There's nothing that you and me can be part of the network, but we can't write the protocols. So ultimately, we will have the government on top of us. So I think it is the responsibility of the government. So I think, yes, it definitely should be because China is saying we want to come up with digital yuan. The group of German banks, they came together saying we want programmable euro. Now what is India going to do? Print more notes with Gandhiji's photo. We have got Gandhiji. No, yeah, we want blockchain. We want digital currency to come up. This is desperately necessary. You cannot say that I'm keep on going to print money. Forget financial. Think about the trees that you're cutting. At least for ecological reasons, stop printing money. Move to digital. Yes, there are concerns, issues, but they can be addressed. Okay. Reliance is working on GeoCoin just for knowledge. See, when you're talking about GeoCoin, see, these things can keep on coming up. You can have Ambani coin, you can have Adani coin, you can even have Shankar coin. Even I can create one. Ethereum gives you that option. But at the end of the day, it is the utility that the coin gives you. Okay. Whenever you create, you can create your own cryptocurrency. And Dogecoin was created like a joke. If you see the logo, it's a dog. And the person who put that, created it, he created it just for fun. And now Elon Musk is. And one of the reasons why Dogecoin is going so high is because of the memes. Everywhere you will see memes with the doggy's photo on it. And people say, oh, Dogecoin, so I'll invest in that. So that is more or less a little psychological effect to it, advertising impact to it. But yes, meme is also a plus point. And talking about your question, Dr. Nilesh, I would say I am not sure if Ambani has any plans to do that, or any corporate has any plans to do that, because till the government comes up with the crypto bill, nobody is going to jump into it. Nobody is going to do anything about it. I just hope that it has got utility to it. And as long as it does utility, it will definitely work. It will definitely be a success.
Sir, can I push in one more question?
Yeah, please fire away. How many questions you have?
Okay, so sir, basically, when we talk about investing in stocks or derivatives as such on the market, so basically we have two ways to look at it. One is fundamental and one is technical. So in case of stocks, being investing in stocks, we have a lot of way to look at the companies. We have a lot of way to look at the fundamentals, financials of the company and everything as such. When it comes to investing into cryptocurrencies, what are the fundamentals that we can look into, or there are only technical ways to look into it through charts and things?
Okay. To answer your question, let me get back to you with a counter question. When you're looking at fundamentals, what are you basically looking at? You're looking at its intrinsic value, isn't it?
Yes.
You're looking at what is its utility, what the business is all about, where is it, what are its, how much capital it has, how much debt it has, what are the debt covenants, what is if you get shares. So these are some of the things. When you're doing technical analysis, you're just looking at charts.
Right.
Okay. You're looking at charts and you're just, okay, idhar jayega. So
playing around, yes.
Yeah. So my point is the same thing is applicable with crypto. For every token, there is a white paper. That white paper discusses the utility. It discusses the whole scope of the token. Who are the developers? Okay, who are creating this token? So you can find out more about, instead of looking, when you're talking about the company, you look at the directors. Here you look at the developers. Okay, when I'm talking about the fundamental things, look at the directors. Okay, is the director trustworthy? Is the developer trustworthy? Which other projects the developer has worked in? So what utility does this have? And when you look at the utility, you will put your own objectivity to it. Okay, you will think, is this feasible? So these are some of the things that you will question fundamentally. So there is your crypto fundamental research. And you will do it. For doing that, you should resort to the white paper. You can also do technical analysis because, again, like I said, there is a 30 to 50% fluctuations when it comes to cryptos. It is okay, it's still acceptable. Okay, although I understand that being in India, you say 30-40% of 40 lakhs, one Bitcoin is 40 lakhs right now. 30-40% of 40 lakhs is too much. I understand that. But when it comes to crypto, that much deviation is still acceptable.
But sir, all the corporates in the world are regulated through some disclosure requirements and regulatory requirements through which they have to report things. None of the cryptocurrencies fall under those kind of regulations. For example, the best example for this is Dogecoin, which was launched as a meme. And suddenly, just because Elon Musk started supporting it, it reached to next levels. So basically, there was no fundamentals related to it at all. There was no disclosure. No one anticipated it rather than Elon Musk's own tweet or Elon Musk himself.
See, in this case, what you're saying is, because in the initial phases, there was not much clarity. There was just Bitcoin before Ethereum. And over time, the fundamentals developed. Okay, let me put it in perspective. If you're talking about stock trading, probably a couple of years ago, there was a far outright system. People used to stand outside the market and shout. So do you think that a person who is sitting at home would know that? He never knew what are the fundamentals to look for. The same thing happened with crypto. It is evolving. So when you're talking about disclosure requirements, companies have disclosure requirements which are mandated by the protocols of the of the SEBI or the SEC, whichever depends upon the country. The same protocols you have in blockchain, the same protocols you have for cryptocurrencies, and it is publicly available on the white paper. Since it is coded to the network, it cannot be altered. And it is encrypted, it is anonymous, so your security levels are also high.
So do they keep updating the white paper as well?
The white paper has to work. Since you're talking about this, I'm becoming a little technical by saying this. There is a consensus algorithm. And when I'm talking about the consensus algorithm, as the word consensus, you realize that the pool of miners, the people who are in charge of the network, they come together, they decide on a consensus saying that this is the protocol we want. And then, okay, for my question, could you repeat it again? Okay, so that protocol is set up. Okay, so once that protocol is in place, I think it would work fine. I hope that answers your question. Please share contact and resource. Yes, yes, I'll do that. I'm sorry, madam. I'm just looking at the. I think Ms. Pooja said, I'm not. Could you repeat it again? Which question are you talking about, madam? It would be great if you could share that. In the meantime, I'll just share the links. Some lot of reference links. I can share that with you.
Sir, in case we have some questions, can we take it after this session offline as well? Or contact you anytime through any of the channels?
Yeah, I would actually insist, I would actually request you to get in touch with Madam, Pratima Madam, because like I said, I'm offering an internship program for anybody who is interested in blockchain and cryptos. So you can get in touch with her. I've already shared with her the, basic on what the internship program is. You can get in touch with her. She has my phone, she has my mobile number, WhatsApp number, and she also has my LinkedIn profile. So we can definitely get in touch. I would request all of you to, if you have any questions, please reach out. Please reach out. But first, we'll have to reach out to Pratma Madam. Once you're able to do that, we can sync up, and I would love to get in touch with. I would like to discuss more with you all, so that there will be more clarity for you of what is happening in the market.
Sure, sir. Sure.
Thank you, sir.
I'll send this particular document of internship across all the WhatsApp group. So for today, we will just stop here and then continue over with the next group and with the next session. So, sir, I formally would like to render a vote of thanks. I extend my heartfelt thanks to Mr. Shankar Ayer for gracing the occasion and giving us insight to the application of blockchain in banking. So the cases you have narrated were an eye-opener for all of us. Thank you so much for the fantabulous session. I thank all the organizing members and enthusiastic participants to make this session very interactive and lively. We look forward to your participation for tomorrow's session on forensic accounting and auditing on the same platform. I request you all to please fill up the feedback form for day 3, that is today. And I will also be forwarding the internship document with everyone on the WhatsApp group. So please be safe and be happy. Good night, everyone.
Thank you, everybody. Thanks for attending. Glad I could talk.
Sir, we would like to have one photograph with you. So everyone who can turn on their videos can please turn on the videos. We can have one photograph, group photograph. Yeah, Mehul Soni, I think you should definitely switch on your video.
I'll just take a minute to do that, ma'am.
Yes. Questions for all the 3 days. So
it's good. The more inquisitive you have, there is a lot of scope in this for people who are looking for full-time jobs and people who are entrepreneurial. This has got everything for everybody. So the more entrepreneurial you are, the more you'll find in this. And I'm actually telling you guys, try it out, find out more, learn more. I think I've shared a couple of links just to broaden your horizons, but you can find a lot more. And please do get in touch if you've got any questions, anything you want to talk about. Please do get in touch. I would be glad to tell you all.
Sundari ma'am. Yeah, thank you. Thank you so much.
Thank you, madam. Thank you, everybody.
Thank you, ma'am. Thank you so much. Thank you, sir.
Yes, sir.